Folks, we've got a lot to talk about. Number one, new data reveals exactly what is going on in this market condition. Number two, the next Fed meeting is tomorrow. What do you need to know? And lastly, number three, we had a massive briefing winner this morning. MSGM ran up about 242% briefing price to highs. How did we find it, and what do you need to know? We'll get right to work in a second, but first I do want to remind you that Moomoo has a 15 free stock promotion link down below just for trying out their very powerful broker and platform. Folks, Moomoo has a lot of features that many other brokers charge you for and charge you an arm and a leg for. For example, one of the things that I've been using right now is their earnings calendar feature that highlights very useful information for this earnings season. Make sure to give them a look. Link down below. Remember, nobody's ever gone broke getting 15 free stocks. Okay, let's go ahead and start. So what you are looking at hither is a 1 month chart of the NASDAQ 100. Pretty solid and mostly unchallenged upward direction for this first month of 2023. If you do the math, the NASDAQ is up about 11% year to date. 2022's year to date return was negative 22.5%. So obviously big stark difference in terms of tone. And because of the very strong downward direction last year, well, you had so many short sellers prepared for more selling off coming into this year, which meant that when things started rallying, all of a sudden you've gotten massive squeezes all across the board. This 2023 stock market return sheet has been trending around Twitter, and it shows Tesla is up 44% year to date, Nvidia up 39% year to date, AMC up 35%, Square up 33%, Meta up 26%, GME up 24%, Netflix up 22%, Snapchat up 22%, Amazon up 22%, AMD up 16%, PayPal up 15%, Google up 14%, Apple up 12%, and Microsoft up 3%. Returns that very much scream a comeback of the risk on trade. It's ironic because a lot of these companies that are on this list are actually cutting prices of their products or reducing services offered or are laying off thousands and thousands of people. What exactly is going on here, Charlito? Well, lots and lots of people are back to arguing for that soft Charmin toilet paper landing. Now, I will admit, I'm a little bit conflicted on this because I do believe there's going to be a need for Charmin toilet paper, but I just happen to believe it's not because the landing is going to be a soft landing, but it's going to be because the market's going to shit all over us and we're going to need it to wipe our face. But folks, what I see here is Wall Street doing business as usual, selling emotion based not on facts, but based on, oh, how can we make the everyday person fall into our traps? How can we trap as many bulls as possible? First, Wall Street went and they sold fear all the way down, which I happen to believe is the more accurate narrative because at least then you're not fighting the Fed. But every single break between them, they try to sell the opposite, which is euphoria. You need to be buying. You need to be buying fast. And now when you've started to see a little bit of a slowdown in terms of negative data, all of a sudden now they're like, okay, this is a guarantee that we're heading to new all-time highs. And if you don't buy now, you're going to miss the boat. What we are seeing right now in the broader market, in my opinion, is a massive trap on the naive, on the folks that hadn't been paying attention to Wall Street's narrative shift that has happened over and over again month by month the last 12 to 18 months. What can I say though? I mean, Wall Street knows their customers. Stock market participants buy when they're told to buy and they sell when they're told to sell. Obviously on this channel, our goal is to get you researching, is to get you thinking for yourself, is to get you thinking in ways that are contrary to the Wall Street consensus. But their goal is to make sure that you just fall into their trap over and over again. And not just you, they also want to trap each other, but that's not as easy. The truth is, folks, the people that win in the stock market, whether they are big hedge funds or little retail traders like you or I, well, the people that win are the ones that acknowledge that the opportunity, the money is made not in getting the right narrative, but is made in the volatility itself. In being able to play the volatility without falling for this need to constantly be right. Because let's be real, nobody can tell you for sure what's going to happen in this market 6 to 12 months from now. I have my opinion, you have yours, but we don't know for a fact. And guess what? The big Wall Street people, they don't either. Just look at their past predictions. So what do? They simply ride the volatility. They play those pricing inefficiencies. But the big advantage that they have over us is they have a lot more money. They have billions and billions and billions of dollars, trillions of dollars under management or in personal private funds. They have media that works for them. They have market makers. They have brokers that work for them. All together to make sure that if they want to ride momentum, if they want to induce a massive short squeeze on the overall market and to some of their smaller competitors, they can do that at any point. But the best time to do that is when the news cycle allows you to, which means, oh, all of a sudden the White House is back to selling the soft landing narrative. The inflation is down from massive highs, but it's down a little bit. And all of a sudden it's like, okay, well, if the market rallies a little bit, people are going to start buying in after us. So let's go ahead and put some big positions in, cause a little bit of a rally in the stock market, and then everybody else is going to go and whoop, bought in massive positions after, and then we can go and we can rug pull them. Ha ha ha. It's actually pretty incredible that Wall Street can keep doing this again and again, and people are just like, oh yeah, maybe this time we should trust them, and then their legs are broken. And they're like, well, okay, maybe I'm in a wheelchair, but I still got 2 arms, which means I could use those arms to go and push that buy button again. If you learn nothing else from this channel, but you learn that Wall Street is not concerned about whether or not you make money. In fact, they'd probably rather have you lose because that means they'd be winning in a lot of situations, but they don't really care about you. If you make money, you lose money, they don't care. They just want to make money themselves. And if you realize that and you could take that to heart, you start realizing that, okay, wait, I need to be a soldier that fights for myself. I can't just let my due diligence fall on the hands of others. I have to go and look at all the data and I have to decide what I think. I can't let them decide for me because guess what? If they decide for me, they're just going to decide whatever plays into their hands. And it doesn't always have to be like some corrupt, evil people at the top. I don't think of it that way. What I think of it is everybody's very self-interested. This stock market game is a game of self-interest. You either acknowledge that or you get screwed by people that do acknowledge that. It's a game. So what are the big money algos doing? Are they buying or selling? Well, they were buying and riding that momentum, but now they're slyly starting to sell. The latest data from Nomura shows that the CTA's speculative position in the S&P 500 is down 8% in a week. The NASDAQ down 24% in a week. So why are they selling the S&P 500 and the NASDAQ? Well, I believe that the devil is in the details. Notice they are selling the NASDAQ at 3 times the pace that they are selling the S&P 500. What is the big difference between those? Obviously, the NASDAQ is higher beta. It moves more than the S&P 500, but it's also returned twice as much year to date, a little bit more than twice as much as the S&P. The NASDAQ is up about 11% year to date, the S&P up 5%. So that tells us this is a lock-in profit trade. But it also goes against this narrative that all of these algos and big money are going and buying the dip because they believe this is the start of the next bull rally. No, they just believe this was a nice momentum cycle to trade off of, and now they're starting to lock in profits. If they thought this was the start of a massive new bull rally, they would be still staying in the position. On top of that, you could also make the counter argument that perhaps they're selling off ahead of the Fed meeting tomorrow, but I don't think this meeting is going to be that contentious. The Fed of today isn't as volatile as the Fed of 6 months ago or 12 months ago. It's not like we're debating whether we're going to have no rate hike or a 75 basis point rate hike or a 100 basis point rate hike. No, we're debating whether it's going to be 25 or nothing, and it's leaning towards 25, so there's not much room for surprises. At the same time, retail trading is up a lot again and breaking out, so be very careful not to get baited into holding bags if you're blindly buying into this market. I believe there's lots of opportunities in this market, but I believe it's a short-term trader's market. Just like the hedge funds are doing, I believe that short-term trades are some of the best right now. Obviously, buy and hold strategies are very tried and true, and I do believe in that strategy if you have a very long-term time horizon. But generally, if you want a speedy comeback, it's probably best not to focus on those right now. It's probably best to focus on the trades themselves. Next, so tomorrow we've got the much awaited FOMC meeting and rate hike announcement. In the past, the Fed has been very adamant about quashing rallies in the stock market using a combination of their soft power, which is their words, and their hard power, which is monetary policy, to make sure that conditions tighten. Now, folks, it's not that the Fed is anti-stock market or is trying to attack the stock market. It's more so that when financial conditions loosen against the Fed's intentions, well, stocks tend to rally, and the Fed does not like that at all. And not only have financial conditions loosened in the stock market, but you're seeing very clear loosening in mortgage rates and other forms of borrowing. Mortgage rates have been downtrending since October, so markets have been loosening quite a bit on their own, and so the Fed has to make a decision. Do we allow the financial system to loosen on its own and continue to do so, or do we exercise some of that power to snap them back into shape? And again, we've seen them do this many times in the past. Financial conditions loosen on their own, and then the Fed's like, stop it, and then all of a sudden they stop it. Right now, the Fed futures are forecasting a near certainty of a 25 basis point hike and about a % chance of no hike at all. The idea is that because inflation has started trending down, that you're only going to see a few more hikes, and they're going to be small little pansy hikes, 25 basis points and then nothing and then cutting. If you look out 2 more meetings into May, markets right now are not pricing in much more in terms of hikes. They see rates capping out around 500 to 525, that range, and by the end of the year, the expectation is that rates are going to be at 475 or lower. So a few more hikes and then cutting. Okay, next, squeeze-a-palooza. So folks, from the beginning of this year, I've been saying you're going to see squeeze after squeeze after squeeze in these first few months. And we have seen squeeze after squeeze after squeeze, and it's just starting to get into February. It's not even February yet. Tomorrow's February. And when I'm talking squeezes, I'm talking squeezy squeezes. I mean, 100% plus runners. This morning, a big winner was MSGM. We briefed on it at about $8.05 a share, and it ran to 27.6 at highs. That's about a 242% run, briefing price to highs. Now, of course, not all briefing plays run, and that's not even the point of the briefings. The point of the briefings is to narrow down stocks with powerful setups that are working in this market condition. But anyways, how did we find it? Well, it was already showing substantial proof of concept in the pre-market, and when you see aggressive rallying in the pre-market, which has much lower volume, if that trend continues after open, you can see a ton of momentum riders jump in and accelerate that trend even more. And in this case, that's exactly what happened. We said it has a bull setup if it holds support at 508, and especially if it makes a higher high and breaks resistance at 811, which would symbolize a massive breakout play. Breakout plays are huge self-fulfilling prophecies right now because people love buying higher highs. And not only did it easily hold above 508, but it broke through 811 within like no time at all, and then all of a sudden you saw a massive rush to the upside, which was quite beautiful. In fact, I saw this and it brought tears to my eyes, and Charlie is not a sensitive man, but I do get sensitive when things run because it's just like so beautiful. But what was the catalyst here? Well, MSGM, which is Motorsport Games, signed an agreement with parent company Motorsport Network, which covered about $1 million worth of debt. Investor Place reports Motorsport Network, the majority shareholder of Motorsport Games, has agreed to a $1 million debt repayment. This taps into Motorsport Games' $12 million line of credit with Motorsport Network. Now, $1 million isn't a lot for a company that rallied at some point today to $174 million in market cap. But there's multiple layers to this. The CEO of Motorsport Games said, "This debt exchange benefits our balance sheet, allows us to pay less interest expense, and will help Motorsport Games to pursue product development and growth opportunities." This is the important part right here. This debt exchange also signals the ongoing confidence that our majority shareholder Motorsport Network has in Motorsport Games. They also announced they regained full compliance with NASDAQ listing rules, which was an open-ended question for some time and a big dark cloud hanging over the share price. And the massive rally today even further ensured that they're going to be in compliance because there's a $1 cap, although that's not why they were in violation of compliance. It had to do with the number of shares they had outstanding. But anyways, so 3 improvements MSGM announced today. Number 1, they improved their balance sheet. Number 2, they got a show of ongoing confidence and support from their parent company. And then finally, number 3, they are going to avoid delisting. 3 things that are very powerful. But did all of these 3 different catalysts combine justify a run that's in the hundreds of percentage points? Well, no, not in my opinion, and not in anybody who's logical's opinion. This was just hype, euphoria, and fun combined. The euphoria here was so out of control that even their parent company, MSGM, ran 100% plus at highs. Again, this is the kind of stuff that we saw in the beginning of 2021 when you had all of the massive spec traders come into the market, and you'd have one stock rally, and then after that stock went up 500%, all of the stocks around it that had anything to do, similar letters, similar spelling, similar names of the CEOs, well, all of those stocks would rally next, and they'd go up 200, 300, 400%. I mean, just totally insane. We're not at that level, but we're definitely seeing some symptoms that are very similar to that. Overall, this kind of run is what happens when you have a low float stock with a fairly decent catalyst in a market where everyone wants to buy the next big gainer. Right now, if something goes and maintains its momentum for a few hours, people in the rest of the market take notice. They start watching it, and all of a sudden they start buying in as it's jumping, causing more and more jumpitos. And in today's market conditions specifically, we don't know how long it's going to last, but in today's market conditions specifically, it is so important to be able to identify stocks before they have these massive runs, or at least early on in the runs. And I can't promise you that I'm going to be able to find all of them or that I know everything that's going to happen. But what I can promise you is that if you do want to join us for our daily morning briefings, we will do our best to present you with the setups and trends that we think you should know about. And if you'd like to go ahead and join us in ZipTrader U and get access to tomorrow's daily morning briefing, which comes out 30 minutes prior to market open, well, I'll go ahead and put the link to that down below. Don't tell anybody, but we went ahead and brought back coupon code GNS because GNS had broken out to a new high yesterday. So if you want a nice discount before checkout, use coupon code GNS. But if GNS doesn't break out tomorrow, then we're going to go ahead and expire that coupon code. Anyways, that caps off today's video. If you found value, make sure to hit that ravishing like button and subscribe, and we will see you in the next one.